Good afternoon, everyone. This is Trader Tim from eminimind.com. Great to have you with me today doing a recap video for the E-mini S&P. For those that were in Vegas at the Traders Expo, it was great to meet some of you and had some really fun conversations over the course of a couple of days. And thanks for those who tuned into the presentation as well. I will have a link for that presentation that I'll publish once the Traders Expo sends that over to me, so you can catch it as a replay. But let's talk about the E-mini S&P today. And I was out Wednesday, but just kind of peeking in as the happenings were unfolding. One thing I was really concerned or interested to see is that if we broke below this 2685, that would be the 60-18 of this long, how does the market react? So I was glad that it didn't happen yesterday while I was unable to trade. And today, what we ended up getting is this very nice V reversal after we broke down. Here's we'll call this the like 84.75, 26.85 area. We broke down, and so there were a couple of things that happened. The first thing that I like to do when the market makes a move lower, breaking a significant level, is look to the most recent swing high. So here's our 85s right up here, and here's the initial break. I like to look for kind of the first retracement in that direction after that happens. And so this first one didn't quite make it into its 50%, but the next one did nicely. And so using this as an entry into the downtrend on a break of the 60-18 of the daily, I'm entering on the 512 tick chart, but I'm using the daily chart, that bigger level, sort of as my line in the sand. We also, yesterday's low was an 86.25, and so that was an important area for us to break. And if we look at that point here, go back a little bit more, we can see how we kind of came down, we broke lows of yesterday and we'll call it 26.85s, about 40 minutes into the day. Then we had a little bit of a rally, and there was this kind of consolidation. Then we moved higher. We came down again, moved sideways, consolidation. So it was really this push down that showed, kind of showed the market's hand of, okay, we were getting some buying, getting some more buying, and then boom, we broke through in a nice, clean, straight move down that gave me the confidence to take this short. If we would have just kind of ticked down one or two ticks and then bounce back up, kind of like we did over here and back here, you don't have as much confidence when you see that buying happening, even if we just break lows by, or especially if we just break lows by a tick or two. So the first thing that I was looking for is, okay, we're probably going to have some sort of, quick sell-off as we break lows, and we did. We went pretty much straight to the negative 23% target, about 5 or so points away in just a matter of it was like 2 minutes where we sold off here. And then what I started doing was looking for extreme ticks, low ticks that might signal that the buying is coming to an end. I'm sorry, the selling is coming to an end, and then the buying is about to start. And in these kind of situations where you have a short that's pretty much in play, some resistance above us, we have a long that had held a little bit and then kind of broke down, and I would expect there to be players on both sides in this range that we've been in, then you see more fake outs and you see more of this where you have a big body candle to the downside and then the next day big body candle to the upside, and especially where you have a tail that dips into lows and then moves higher. if we come over to the open, we can see that we did dip down, and that low was a 2678. So as we came over later in the morning, it was about an hour in, 2678 was also kind of this area where the market started to uh, move lower. And so by sort of establishing that we bounced there once a little bit earlier in the morning, bouncing there and then breaking through an hour in, I figured, well, we're probably going to have most of the sellers out of the market in a very short amount of time because they had their opportunity to sell. And then as the market bounces, those who are short are then kind of getting a little bit more heat, taking more heat, and their position is either not as profitable or underwater. And then as we come down and we get a little consolidation and then a bounce, it's an opportunity for those shorts to get out, consolidate again, bounce, an opportunity for shorts to get out. And for new shorts that are coming in on the breakdown, you have to figure that, there's enough bulls out there because we've seen so many days in the last couple of weeks where the breadth and the advanced decline line have been very balanced, 1-to-1, or very close to it. You got to figure that there's enough bulls out there to at least give us kind of this V reversal and push us back higher. So that being sort of my conjecture or thought process for the morning, when we did get these extreme low ticks, I pull back a little bit. We had them initially at the open, but as you've probably heard me say, the first minute or two, I kind of ignore those extreme ticks. And so when we got back to that about an hour into the day, that was a great opportunity to look for a long setup. So short down here, and then as I got taken out on this little spike, uh, traded from the 82s, actually it was 81.75s, down to the target, 76.50, the negative 23% target. And then we got this little bounce, sold off, and so I brought my stop down above this little swing high. And then that's where I actually got taken out of the rest of the position, made another leg lower, and then I took a long down here on this low tick. We had this little cluster down here, minus 1349 in the NYSE ticks. And so by getting long, I like to take the very first one because it puts my stop, pretty low, close to lows, if not below it. But you could also take the second one. And that's where if you draw up the next retracement short, the first one is a little riskier, especially because a lot of the times we don't break that 61.8. But I'm weighing the low tick with more weight than a continuation of the short. So if you want to wait for a little bit more confirmation, just wait for that that 61.8 to break, and then you can draw up the next long. Or you could even, let me adjust this. You could even wait for that first long to trade and work out, and then take the second long in the move. And I was able to ride this up just by same concept as the short, trailing swing lows, trailing the swing low, just moving my stop underneath these swing lows here, and I was eventually taken out as the market pulled back here, and I had my stop back here at the 85, I think it was, 84.50 is where my stop was at the time, and then got taken out as we broke down just by a little tick. And sometimes that happens if you're trailing the developing 61.8. Sometimes you can stay in the trade, but even that one, by trailing the developing 61.8, we did break down below that as well. So 10 points is still a great move to capitalize on. The idea is to capture a good chunk of the move. You're not going uh, to get out at highs and to get out at lows every single time. So those were kind of my two trades for today, and how I kind of came into the market and my thought process around that. As we head into next week, I wouldn't be surprised if we get a lift back up here to 75s. And then Friday will be kind of a quiet half day in the markets. Wouldn't expect a whole lot from that. But then the following week, we've got a couple more full weeks of trading before the Christmas holiday. And it'll be interesting to see if we can come up again and maybe triple top or break this 28.15s, or if we bounce to 75s and then sell off and take out this swing low. So I'm sort of indifferent right now. We could go either way. Both sides have been dirty, meaning we traded to the 61.8 on the short up here and on the long. So lots of players on both sides of the market, which makes for these bigger range and little more volatility, but really not a ton. The VIX is not very high at all, and that's really our indication of volatility. I mean, we're right about 20, and so that's really low, or pretty low. Low to mid-teens is very low. Low 20s is low. 25 to 30 is good, moderate, and so we have plenty of room to increase volatility from here if we start selling off. So I hope everyone has a great weekend. We'll be back on Tuesday with a live trading room, market analysis, and then taking the Thursday, Friday off for the U.S. Thanksgiving holiday. So thanks for tuning in and have a great weekend, everyone.